In this video, we're going to be learning about the double top and double bottom chart patterns, and also the triple tops and triple bottoms chart patterns. So like I said before, these are chart patterns and they are used in technical analysis. Okay, so what's a double top? We're going to start with the double top. So let's assume price is going up, trending up, and then hits this level and then comes down to a support level and then starts to go up again, then hits this level for a second time. When it hits this level for a second time, we have a double top. It's that simple. Now when it hits this level, traders observe it and then they predict that the market will come down to at least this neckline region again. But if it happens to come down to the neckline region and then breaks the neckline region, okay, we are estimating that the market will then come down to a level which is approximately in size the same as the level from the neckline to the top of the double top. Okay, as you can see, I've drawn out these arrows here. Now this arrow is the same distance with the arrow here. So the market, after breaking this level, the market will at least reach this level. Okay, so that's how a double top will typically play out. It's the same thing for a double bottom, just that the double bottom happens in an inverse manner. So the double bottom, instead of an uptrend here, we have a downtrend coming. It hits this support level, goes up, hits this resistance level and forms the neckline, and goes down again, hits the support level for the second time, and we are looking to buy to make the profit like this. Yeah, and then if it breaks this neckline region, we are estimating, or we are predicting, that the market will come to a level that is approximately the same as this level from the neckline to the low of the double bottom. So that's the idea behind the double top, or that's the principle behind the double top and double bottom. And these principles have been in play for decades, for centuries, since the inception of the Forex market. Okay, and then people have been using these ideas to make a lot of money. Of course, we're going to learn how to use them to make good trading decisions. Remember from our last video, we understood that we don't just trade these patterns randomly or in isolation. We don't just trade them in isolation, but we tend to trade them in agreement with other technical analysis. You don't just see double top and just start selling. You have to look at other forms of technical analysis and see if they agree also. Okay, so of course we're going to take live trades in this course. We're going to take trades and we're going to use all this concept we learn, but just know for now that double top has to do with two tops and double bottom has to do with two bottoms. Now in the next slide, we're going to look at how the double top and double bottom play out in real life. Now, this is how they play out in real life. Remember I said they don't play out so clean. Okay, the chart will never be that clean. Okay, this is how the double top play out. So the market is going up, hits this level, comes down, forms the neck region or the neckline, and as you can see, this neckline is a support level because it has been tested here. Sorry, it has been tested here, it has been tested here and here, and it has come here again to form the neckline. Then it starts to go up again and then goes up and makes a second top. Now this qualifies it as a double top, and then the market then breaks down. Now as you can see, the market has broken the neck line or the neck region at this point. Okay, it broke it at this point, then went back up to retest it. Now this is where we would love to enter a sell trade. Okay, now we enter a sell trade here and then take this profit. Remember that the principle says that it's going to come lower to a point approximately the distance from here to here. So as you can see, the market came down to this point and we were in profit. So that's an example of how the double top would play out in a live scenario. Now this is the double bottom. This is the double bottom. And you can see that the market was selling, came to this point, created the first bottom, came up to this point, created the neckline, and then came down again to this point to create the second bottom. Now traders will be looking to go long here, then imagine we bought here, we'll be making this much profit. Now this is how the double bottom will play out in real life. Now we're going to look at live examples on TradingView of how the double top and double bottom will play out. Now I can see one. Let's just delete drawings, delete all the drawings we have, so we can see the chart clearly. From here I can see a double top. I'll just use my tool here. So let me draw out this line. Now this is the first top and this is the second top. When you're doing this in Forex trading needs a lot of attention, needs a lot of observation. Okay, needs a lot of observation, needs a lot of attention. So as you can see, the market started to come this way, came here, made the top, came down, and then start to go here and then makes another top here, making it a double top, and then came down, then broke the neckline. Remember, the neckline is this point. Now this is our neckline, this is our neck region. Okay, broke this neck region and then made it down to this point. Now when we take a rectangle tool, for example, and then draw, when we draw this, that's from here to here, and then clone it. Now when we clone this and come and compare it to what's happening, now when we clone it and come and compare it to this place, we can see that the principle of the double top has been fulfilled, because the market came, broke this neckline. Imagine we sold here, we will be making the profit down to this point. It came and made it down to this point at approximately the same height from here to here. So you can see this is one very good example of a double top. Like I said before, it won't play out like it's not going to be clean. The chart will not be clean. You have to be very observant to understand these things. And we've got one example. Let's come here and look at another example. Now this is another example of a double top here, and this is another example of a double bottom. Okay, remember I said it's not going to play out very perfectly all the time. So let's assume this is a double bottom. Okay, let's assume this is a double bottom. So if this was a double bottom and then the market broke out here, you can see that it came and then still went down like this. Okay, it didn't continue. But this is an example of a double bottom. This is an example of a double top. There are a whole lot of examples. If you just look very closely, you observe that there are a whole lot of examples. This is another example of a double top. Double top came and broke the neckline region and went up before continued selling. Okay, now if we had entered a trade like this, okay, for example, if I see that it breaks the neck region, I'll have to wait for a retracement. Now this is what we call a retracement. Now when it retraces and comes to this point, we don't just enter. Okay, we don't just enter because it just retraced and came. We have to wait for a confirmation. Okay, we don't enter trades randomly. We have to wait for a confirmation. This, I would say, is an example of a confirmation. Now this is what we call a candlestick pattern. This is an inside bar. It's an inside bar. Of course, we've not looked at candlestick patterns, but we're going to look at them in the past. But this is an example of a confirmation. And for me, this is a confirmation. This is another confirmation that the market might continue going down. And with proper risk management, that's by using stop losses and using good lot sizing, you'll be able to enter this trade. And then even if it went up and took you out, you will still not be that hot. Okay, but most likely you will have made profit. And as you can see, the market went down and then still made profit, still made even more than the estimated size here. So that's it for this. Let's go to 1 minute. This is Euro USD, sorry, daily, not 1 minute. Let's go to daily to see if we're going to have some examples here. Look at our previous example. Look at another example. This is another example of a double top. Another example of a double top. The first top, the second top. Okay. First top, second top. Came and then broke the neck region. This is the neck region. It came. Let me just delete this. It came here, broke the neck region, and then made it to the downside. So if we just duplicate this guy here, we'll then see that we were able to make this much profit. Now the principle of the double top has been maintained in this example again. When we keep going, we will keep seeing examples. We keep seeing examples of double top, double bottoms, and so on and so forth. Just draw a trend line like this. Now, let's go back to our presentation and go to the next, which is the triple top and triple bottoms. The triple top is basically the market going up, coming down, going up, coming down, going up the third time. Then, okay, so it has made three tops. Okay, so that's an example of a triple top. Then when it breaks the neck region, we predict that the market will go down to at least approximately the size of the neckline to the top of the triple top. The same thing with the triple bottom. It goes down, creates the first bottom, goes up to the neckline, then it goes down, creates the second bottom, goes up to the neckline, goes down to create the third bottom, then goes up to the neckline. If it breaks the neckline, we predict that the market will come to a level of approximately the same size as from here to here. And again, we have some examples of the triple top and triple bottoms. Now, this is the first one here. We have the second one here. And okay, this is the first top. We have the second top and the third top. Now, you can see we have our triple top. And when the market broke it, as you can see, it made the same distance as from here to here. Made the same distance before retreating back to the upside. Okay, the same thing with our triple bottom. Made the first bottom, came up, made the second bottom, came up, made the third bottom. It's still coming down. Probably it's going to break or still make another bottom. Okay, so this could be multiple bottom, not just triple bottoms. So that's how the double, triple tops and bottoms play out in the forex market. Let me just see if I can see examples of the triple top bottoms here. Let me just delete all these levels in drawings. And then remember, like I said before, nothing plays out very perfectly in forex. It doesn't play out this clean. You will never see it play out this clean, okay? Never play out this clean, but when you observe properly, you're going to see that everything happens just the way you've been taught. Now, if you check this very well, you observe that we have a triple top. Triple top is first, second top, and then the third top here. Now, this is the neck region. Okay, so we will see this is the neck region. It came here. It actually didn't come to the neck region at this point, but but this is still the neck region. Then it breaks the neck region, and we can see that it has made approximately the same height it made, even made more than it made between the neck region and the top of the triple top. We can again see a triple bottom here. You can see a triple bottom. You can see the first bottom, the second bottom, and the third bottom. Now we can see this is the neckline. This is the neckline. So, and after it broke the neckline, we can see that it's let's bring this down like this. We can see that after it broke the neckline, we can see that it kept going up, came and retested the neckline again and started going up. So you can see that the trend continued going up, This is how it plays out a real life scenario. So let's just draw a trend line. So imagine you then observe this triple top, or sorry, this triple bottom. Then it broke out. You enter a buy trade here. You keep going. You enter a buy trade there, and then draw your trend line. Remember, I said while drawing your trend line, you have to make sure all the wicks are being touched, all the points are being touched. So you draw your trend line and then touches all our points. Okay, so you just keep going. You buy here, it goes up. Maybe you close your trade here or whatever. You have to close your trade at a good level, at a good resistance level. Okay, at a level like this, for example, or whatever level based on your strategy. And then when the market comes down again, okay, let's assume you close your trade here. Okay, you entered a buy trade here, you closed it here. And then when the market came down and created another level, or touched your trend line. Remember, we are drawing a trend line from here and it has touched here, but it hasn't touched here. So let's assume the market entered and touched the trend line again. You enter another buy trade, came here, you closed at this point, then came down again and touched the trend line. You entered another buy trade. Okay, so this is what we call trend following. You are following the trend. Now all these trades you've just entered and made, and all this money you've made, were made possible because you were able to spot the triple bottom here. So price patterns are very powerful and very important in forex trading. Like I said, they form the basis of trading. And we're going to look at how to trade with these price patterns. We're going to look at them very much in the future, especially during our live trading sessions. We're going to look at how to use these patterns very well. Whenever you look, you tend to see a price pattern. They always occur in the market. Okay, so you just have to be very much observant, very much dedicated to the craft. You have to keep looking out for them because they are always there. And when you follow them, they're going to play out well and make you a whole lot of money. So that's it for this video. In the next video, we're going to be looking at the heads and shoulders, and also the inverted heads and shoulders, which is the opposite of the heads and shoulders. So that's it, and hope to see you in the next. Bye.